Today, we'll go over the top 5 Fidelity investments to buy and hold forever. To frame the Fidelity funds we're recommending today, we'll use the 3-fund portfolio strategy to guide our discussion, one of the most popular do-it-yourself investment strategies, and as the name suggests, it is made up of 3 simple funds. Typically, an equities fund, an international fund, and a bond fund are used. As a result, all the funds we'll recommend today will fit into at least one of these categories. Hey, welcome to Stock Market Mate. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you are done with that, then let's get right into it. Number 1. Fidelity's US Bond Index Fund, or FZROX. The first Fidelity fund you should buy and hold forever is Fidelity's US Bond Index Fund, FZROX. It is based on the BLOOMBERG BARCLAYS US Aggregate Bond Index, which includes investment-grade government bonds, corporate bonds, and mortgage-backed securities. It currently holds approximately 8,430 bonds. The top issues are the US Treasury or mortgage-backed security issuers such as Fannie Mae and Freddie Mac. It has a 0.025% expense ratio. That is, if you invest $10,000, you're essentially paying Fidelity $2.50 to manage the fund for you. Since its inception in 1990, the fund has averaged annual total returns of 5.33%. What are funds and why do you need them? Bonds, in the most basic sense, are loans. When you purchase bonds, you're effectively lending money to someone. In this instance, to a business or a government agency. Because they differ from stocks, they are an important addition to a well-constructed investment portfolio. Consider stocks as your main source of wealth creation. You're not going anywhere without it. And bonds are like brakes. You could drive yourself off the road if you don't have it. Bonds in your portfolio help to smooth out your investment ride because they have lower returns and less volatility. During a market crash, when your stock investments can drop by 20 to 30%, your bond investments will hold steady and keep your ride from becoming too rocky. As you approach retirement age, you should begin adding them to your portfolio to help smooth out your investment ride. If you own Fidelity, consider FZROX as your primary bond holding in your portfolio. Number 2. Fidelity Total International Index Fund, or FDIXH. The Fidelity Total International Index Fund is the second Fidelity fund you should buy and hold forever. The fund follows the MSCI All-Country World Index. Excluding the US, it is made up of approximately 5,042 international corporations. Companies like Taiwan Semiconductor, Nestle, and AMSL are among their top holdings. It has a 0.06 expense ratio. If you have $10,000 invested in FDIXH, you're effectively paying Fidelity $6 to manage the fund for you. Since its inception in 2016, the fund has averaged annual total returns of 5.99%. FDIXH will expose you to the international market outside of the US exposure to various countries, industries, and even currencies. And we can use what happened in the Japanese stock market as an example of why we might want to invest in an international fund. The Japanese stock market had the highest capitalized value in the world at the end of 1989. The Nikkei 225 index, Japan's index of their 225 largest publicly traded companies, reached an all-time high of nearly 40,000. Unfortunately, 22 years later, the Nikkei was below 8,500 and has yet to reach its all-time high. Even more unfortunate is the Japanese investor who failed to invest in international stocks outside of Japan. Companies based in the US currently lead the world in terms of market capitalization and revenue, but who can guarantee that it will remain that way in the future? Unfortunately, the same thing could happen to US stock investors. We personally maintain strong confidence in the US economy and US-based companies in general, but we must constantly check assumptions. Never treat the highly likely as certain and the highly unlikely as impossible. Financial writer Larry Swedra once said, "As you gain experience in the international market, you can begin to incorporate them into your portfolio." And FDIXH is an excellent choice for representing your international holdings. Number 3. Fidelity Zero Total Market Index Fund, or FZROX. Fidelity Zero Total Market Index Fund is the third Fidelity fund you should buy and hold forever. This fund follows the Fidelity US Total Investable Market Index. It represents approximately 2,661 companies based in the US. This fund's top holdings are Apple, Microsoft, and Amazon. It has a 0.00% expense ratio. Yes, investing in FZROX is free. Since its inception in 2018, the fund has averaged annual total returns of 11.82%. FZROX is a total market index fund, which means it tracks the entire stock market in the US. It would be an excellent choice as your primary equity holding in your 3-fund portfolio. However, there are a couple of things to keep in mind about this fund, especially when compared to 2 other equity options, which we'll discuss shortly. One is that it is tracking Fidelity's in-house index, the Fidelity US Total Investable Market Index. This isn't necessarily a bad thing, but there are more than 2,661 publicly traded companies in the US than this fund represents. This fund has excluded extremely small companies from its index. In the grand scheme of things, it makes little difference in terms of performance because the representation is based on market capitalization. As a result, the excluded companies would only account for 1% or less of the total fund. However, it is worth noting, here the total market isn't quite the total market. Another thing to keep in mind about FZROX is that you cannot transfer your shares to another company without selling your current holding. When you sell your holdings, you must pay capital gains taxes. To attract more customers, FZROX was designed with a 0% expense ratio, so Fidelity doesn't want you to move your money to another firm. This restriction creates that barrier. Paying 0% is appealing, but keep in mind that free comes with conditions. However, if you intend to stay with Fidelity for life, FZROX is an excellent equities fund to own. Number 4. Fidelity Total Market Index Fund, or FSKAX. Fidelity Total Market Index Fund is the 4th Fidelity fund you should buy and hold forever. The Dow Jones US Total Stock Market Index is tracked by the fund. It represents approximately 4,009 companies based in the US. This fund's top holdings are Apple, Microsoft, and Amazon, which are essentially the same as FZROX. It has a 0.015% expense ratio. If you have $10,000 invested in FSKAX, you're paying Fidelity $1.50 to manage the fund for you. Since its inception in 1997, the fund has averaged annual total returns of 8.29%. Prior to the introduction of FZROX, it was Fidelity's original total market index fund. And FSKAX does exactly what its name suggests. It invests in the entire US stock market, basically any stock based in the US. When it comes to investing in the stock market, the most important principle to remember is diversification. Many people believe that the only way to profit in the market is to beat the market, by investing in good stocks or actively managed mutual funds. Unless you're a professional investor with hundreds of analysts working for you, we can't win the stock picking or fund picking game as analysts who are constantly interviewing and researching companies and industries. The odds are simply stacked against the individual investor. So the best strategy for beating Wall Street is to simply track the market at the lowest possible cost. If you want more flexibility than FZROX, FSKAX is a great fund to hold as your core equities holding in your portfolio. Number 5. Fidelity 500 Index Fund. Fidelity 500 Index Fund is the 5th Fidelity fund you should buy and hold forever. The fund is based on the S&P 500 Index, which represents the 500 largest publicly traded companies in the US, 508 in total. This fund's top holdings are Apple, Microsoft, and Amazon. FZROX and FSKAX are 2 examples. Not surprising given that company representation is based on market capitalization. These large companies account for a sizable portion of the market. It, like FSKAX, has an expense ratio of 0.015%. So if you invest $10,000, you're paying Fidelity $1.50 to manage this fund for you. This is the oldest of the funds. It began in 1988 and has averaged 10.66% annual total return since then. When most people talk about the stock market, they usually mean the S&P 500, not the total market index. And the reason for this is that it is much older. It began tracking 90 stocks in 1926, and by 1957, the list had grown to 500. And it has been the go-to index to represent the stock market for the past century. When you turn on the financial news, you'll always hear how the S&P 500 is up or down 50 points. It represents the 500 largest corporations in the US, weighted by market capitalization. Because it is weighted by market cap, despite the fact that there are approximately 4,000 publicly traded companies in the US, these 500 stocks account for approximately 80 to 85% of the total market value of all US stocks, and the index's weight automatically adjusts based on changing stock prices. To this day, the S&P 500 is the benchmark against which professional mutual fund managers and investment firms compare their returns. As a result, if you want your equities holdings to match the performance of the largest US stocks, which are essentially what moves the market, Fidelity 500 Index Fund should be your primary holding. However, you can't go wrong with any of the Fidelity 500 Index Fund, FSKAX, or FZROX as your primary equity holding. They're all excellent funds. You simply want to know exactly what you're buying. Well, that's about it for today. If you find this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!